Hello, I'm Brent Wilsey, and with me is Chase Wilsey from Wilsey Asset Management. A lot of talk about housing. Today we're going to talk about housing somewhat, talk about housing starts. The housing starts come in at 1.099 million starts. The estimate was 1.175 million, so slightly below that, so you might think there's some problems. However, if you look at year over year, a longer time frame than month over month, they're up 19.9% on the multi-family homes and up 9.6% on the single-family homes. So things are looking pretty good longer term.
Yeah, I definitely like to look at year over year just because I think it creates a better picture of seeing where we were last year versus this year. Instead of, as you said, month over month, I think things can kind of get lost of how good things actually are getting.
Too volatile sometimes.
Yes.
But why were they not as good as we expected? Supplies of concrete and other things are kind of having a problem getting this stuff. Labor shortages, electricians, plumbers, there's not as many as there should be. And the weather back east, remember the big storm back east?
Ooh, that was pretty brutal, yeah.
Why we live in San Diego.
Yeah, it definitely slowed down the housing starts a little bit.
And one other thing too, year over year, that was very exciting, purchase applications for mortgages up 30% year over year, all great positives.
Wow, that is amazing. 30%, that's a huge gain. Can you imagine having a stock appreciate 30% in a year? Wow, I'd be stoked all the time.
All right, let's stay on the housing front. Let's talk about spring housing season, because that starts off, actually just started off last week with the President's Day. Short supply this season, not as many houses to sell.
Yeah, I mean, it seems like there's a bottleneck and, people owning homes or holding on to those homes and not selling them.
That's right, that's right. Low supply since 2005. That's 11 years. I mean, we're in a difficult time here. However, don't get too excited. Don't think you can put any price on your home. Overpriced homes still will not sell. People still kind of look like, nope, I won't pay a high price for that home.
That's good to hear. You never want to see people overpaying for things. That's when things become an issue, when people start overpaying for things and they get underwater. So I'm glad to hear that.
Yeah, I was going to say, wait, it's not how we got in trouble in 2008?
I think so.
I think so it was. Don't overpay for anything. Stocks, homes, whatever. The big benefactor, though, is home builders. We love home builders.
Yeah, and I mean, with the shortage of homes and, as we said, those homeowners holding on to those homes, new people to buy homes, there's no homes to buy. So home builders are continuing to buy homes and create supply, which is much needed in this economic situation.
If you don't have enough, build more.
Exactly. Build it and they will come.
That's right, that's right. Let's talk about a stock for you. As always, trying to look at stocks you might have interest in. Groupon. They were just in the news because Alibaba invested $100 million in this company.
Yeah, I think they were up something like 40% on the day.
It's crazy. I mean, it's a 5.6% holding for Alibaba. However, you may think this is a great buy because of that, but Alibaba may have different ideas for investing than what your needs might be.
Yeah, I feel like a lot of this is just speculation of what Alibaba's going to do. I don't know what they're going to do. I don't know how they're going to affect the stock. I think this stock has definitely been overinflated by this hope of what Alibaba is going to do.
And Alibaba might be buying Groupon just for the customers, not for the investment part. Look at the numbers on Groupon. Year over year, earnings per share down 186%. Sales, okay, up 2.2% year over year. Nice thing about the company, I will say, maybe why Alibaba bought it, it's hard to kind of get that out. No debt. Current ratio only 0.89. We've talked about this before.
Yeah, I mean, it's great to see no debt, but if they do take on debt, that low current ratio is kind of a little bit of an issue.
Yeah, can't pay the bills, not liquid. And then December 2017 EPS earnings per share, 18 cents minus, not positive, but a loss of 18 cents. Not a great company to get into. So in the news, but
yeah, and also one thing I do want to point out is their IPO was back in 2011.
Yeah.
They hit a high of $31 per share back in 2011. They're now at about $4 a share, even after this appreciation.
Isn't it like 3 or something? 360?
Yeah,
we'll be nice. We'll say 4.
I think I rounded up. Yeah.
All right. So if you think Groupon's a great buy, I like to use the service. Don't buy the stock.
Stay away from it.
For more information, or you got questions for us as well, or a company to discuss, go to our website, smartinvesting2000.com. That's smartinvesting2000.com, or give us a call, 858-546-4306.
And don't miss any upcoming daily briefings. Join our group, Smart Investing, with Brent and Chase Wilsey.